Hey there, good afternoon traders. This is Trader Tim from over at eminimine.com doing a trade recap video. Today is Thursday, October 8th. We're going to run through trades from yesterday and today, so Wednesday and Thursday. You can see on the S&P here that we are approaching the 61.8 of the short, and we are holding the 61.8 of the long. So at this point, market's not quite closed yet, but if we can break above the 61.8 either into the close or tomorrow, then we should have a confirmation to the upside, and we should be able to come up and take out or at least retest the highs that we made at the beginning of September. So let's take a look at today's trade. Now today, very much a range-bound day, and it was very clear early on when we were not able to take out or really make a strong move above or below the first 30-minute high or low. So I use that as my opening range. It kind of gives the market a little bit of time to settle out, and that's just the first 30 minutes after the NYSE opens. So you can see this candle here right at the top of the hour. We opened up, spiked, and then sold off, and in that process, we went above the first 30-minute range and then fell. We dipped one tick below the first 30-minute range and then rallied. Up until that point, we really hadn't gone anywhere as far as trending. Following that point, we didn't trend at all. And then a little bit later in the morning, about an hour into the day, we were able to put in a relatively bullish candle and close above the first 30-minute range, but then immediately roll back over. And so without seeing any follow through, without a pullback that sits above the 30-minute high and then gets bought, or sits on top of the first 30-minute high, or maybe it just dips in a point or so and then it gets bought and we put in a higher low. Without that happening, there's really no opportunity for a trend higher to develop. And so all we really ended up with was a bit of a double top here, and then sold off, another spike up, but then wasn't able to close above the first 30-minute range and fell right back in it. And then a fourth time here, spiked above and then fell back in it. Typically, when we break back into the first 30-minute range, so we're trading above it, hanging out up top, when we break back into it, we can typically go across to the bottom of the first 30-minute range. So this section, we only made it kind of to the halfway point and then rallied and then fell down, but I'm usually targeting the opposing 30-minute range. So if we were trading below and then we came back into it, then I would target the other end. The other thing that you'll notice on days like today is that the NYSE ticks are very beneficial. You have lots of low ticks that line up with low price, high ticks that line up with high price. Now typically, I like to see a break of a swing high or a swing low before taking a retracement. And so what I mean by that is if this, let's just go back a little bit. If this is a swing high, and here we have a low, I would want this swing high to get taken out as it does in this push up before entering a trade. Conversely, if you have a situation like this where the market moves down and then we bounce, the swing high would technically be all the way up here, the last high before the fall. So I typically don't get super aggressive with taking retracements unless we get a swing high or swing low break. Or in the case of today, you can get a little more aggressive when you have a low tick that lines up with low price, and you can just draw up the very first setup that presents itself and then take that one. It needs to be a range bound day. That needs to be clear. It needs to be a low tick at lows, so you're sort of offsetting the need for a swing high or low break with a couple other factors. So in some regards, it's not excessively aggressive, but you can shift your parameters a little bit if you get a low tick at lows, or just an extreme low tick as we were getting today. These low ticks after low ticks, relatively low to what we were seeing in the morning, and then relatively high. We did get a couple plus 1,000 ticks a little bit later in the morning. But buying up, you see a low tick, and using that as an opportunity to come in here and buy up on a pullback at lows. So trying to get long at lows and get short at highs, high ticks and low ticks. That's certainly a viable approach. You just have to remember that when you're trading at a halfway back, in kind of the traditional sense, you don't have those high and low ticks to correspond with. Since you're not at the high and low of the day, you're at sort of a midpoint or a pullback. And so waiting for a swing high or swing low to break can give you a little extra confirmation. I actually tried to short here on this double top, but I didn't get filled. And then this guy, we had a high tick up here that lined up with high price, and I was drawing up the retracement. There wasn't really a fill for me up here, and so by the time you get down here, we kind of, if I hold my cursor here, we already traded halfway through. So I felt like shorting up here, we already went halfway to the other end of the range. And why would we not be able to keep going and fall? Why would we come back up to highs, or like the top of the first 30-minute range, and then roll over? So it really wouldn't have mattered because my order would have just been, unless I got a magic fill, it likely wouldn't have been filled. So that one was kind of a no trade as well. Let's scroll back to yesterday. And yesterday, a little bit different situation. Not so much trending right at the open, or range bound right at the open, excuse me, as we zoom out and look at the larger picture for the day. Most of the morning was by and large sideways, but with the gap up yesterday, we started looking like, we have the potential for a trend day. And so the first trade was about 36 minutes after the bell. I just drew up this first retracement. We did trade through the 61.8 by a tick. I like to see it break by at least 2 ticks or 3 ticks to be convincing. So I was okay. So here's the swing high that I was just referencing. Taking out this swing high gives you the okay to draw up the setup on the 512. And then it was a little bit messy, but it lined up, the 50% lined up really nicely against the 50% on the 5-minute chart. And we did dip into the 61.8, but a 2-point stop was plenty. Got a move, 3-point target, and then was able to just trail my stop on the next 61.8 like so. That's all that one did. And then the next one was from the higher low here up to highs. And same kind of a setup. We pulled back. We kind of made this triple bottom here. Notice how this high was not taken out, so I didn't take the first setup like that because we didn't break the swing high. We would have needed to go a little bit higher. But what I did was go from lows to highs, and same kind of a messier entry where we had a little bit of heat on the trade. It goes against you for 20, 30 seconds. But then this one got some momentum. It was a little bit odd drawing from the swing low down here, even though it was so close to the low. But I took the swing low there to highs, trailed my stop behind the 61.8, and then did that again, low to high, trailed it behind the next 61.8, and then that's where I got taken out of the trade. So 2 trades yesterday, nothing today. The important thing to remember is that we want to be looking at a few key places. We want to be looking at, on range-bound days, the top and the bottom of the first 30-minute range. And we had some of that yesterday, especially after the first hour of the day. We kind of hugged the top of the first 30-minute range most of the morning. And then you want to be looking at the halfway backs for the day. And those counter trend trades where you're shorting highs and buying lows, try and, you know, have those be in conjunction with high and low ticks. Those can be a helpful way to filter out some trades that may end up just being a little bit of a fake out. But if you kind of stick to those points, buying the micros after the halfway back on a pullback when the market's trending, or on a bounce when it's trending to the downside, or fading the highs and lows, you're using the same entry as far as drawing up a 50% retracement on the 512. It's just pinpointing exactly those 3 locations for putting on your trades. So if you have questions, feel free to leave them in the comments below. If you like these videos and you've been watching a lot of the videos and never have been over to the blog, you can check that out, eminimind.com. And I hope everyone has a great rest of your week. We'll talk soon.